Good morning, everybody. Welcome to today's European Session Outlook. This is Alex, Senior Account Executive with GDMFX. We'll start with the North American markets. We'll start out with the economic reports. A report found U.S. job openings known as JOLTS jumped to 5.6 million in December, the second highest on record. But inventories at U.S. wholesalers fell in December for the third straight month. Another sign companies cut back on restocking toward the end of 2015 amid softer sales. We will be awaiting Yellen's testimony today as the most important event for the day. The market is starting to price out any more rate hikes from the Fed in 2016, let alone at the March meeting. Anything from Janet Yellen that confirms or denies that thinking will see markets react as the feeling that the Fed acted too early in December continues to grow. The biggest mover was the USD Swiss franc, 140 pips down. We also have the monthly budget statement due later today. In the European markets, we had German industrial production year-on-year come out at negative 2.2%. The previous was negative 0.3%. And month-on-month, negative 1.2%. The previous was negative 0.1%. The German trade balance came out at 18.8 billion. The previous was 20.5 billion. The German exports, negative 1.6%. The previous was 0.5%. And imports at negative 1.6%. We also had the French budget at negative 70.5 billion. Alright, today we have the EU Commission releases economic growth forecast, very important, and the Italian and French industrial output as well. Alright, in the UK, we had yesterday Tier 2 events, BRC retail sales monitor, 2.6%. This is 2.15% better than expected. The trade balance, non-EU, came out at negative 2.7 billion British pounds, and the total trade balance at negative 9.9 billion pounds. The goods trade balance is negative 2.357 billion pounds. The markets are increasingly turning bearish on the cable despite the outcome of the Brexit referendum. Major commercial banks and hedge funds are predicting a decline in the price of sterling versus the dollar of between 8 and 13% in 2016, and that is if the UK chooses to remain in the EU. Projections for the potential losses in the case of a Brexit range from 20% to 35%. Another reason for the overall bearish sentiment towards the sterling is the fact that the Bank of England is falling well behind the Fed in the timing of the first interest rate hike. Nevertheless, a weaker pound should boost growth, which is currently at a 3-year low. The FTSE 100 lost 35 points yesterday and closed at 5,660. The 10-year gilt yields were unchanged at 1.57% yesterday. And the GBP Swiss franc moved with 180 pips down yesterday. The range was 282 pips. Today we await the GDP estimate during the same time as Yellen's testimony. Alright, in Asia and the Pacific, we had some news from down under. The Australian new home sales, 6% up from previous negative 2.7%. And in New Zealand, we had the electronic card retail sales month on month, 0.3% up from negative 0.2%, and year on year, 5.2% down from 5.3%. Tonight we have the New Zealand Business PMI data, which presents business conditions in New Zealand. Alright, the last sector for the day, commodities. The American Petroleum Institute late Tuesday reported that crude supplies rose by 2.4 million barrels for the week ended February 5th. Something interesting is that the U.S. crude oil production averaged an estimated 9.4 million barrels a day in 2015 and is forecast to average 8.7 million barrels a day in 2016 and 8.5 million barrels a day in 2017, according to the EIA. Gold had a range of $13, trading at $1,187 now, and crude oil had a range of $2.90, down at $28.50 now. All right, that was all for today. Thank you everybody for the time. I will see you next time. Goodbye.